tackle today. Coach Matt, Coach Mark, bringing you all of the charts, market news, everything driving the market in under 10 minutes. We're going to be on pattern watch in markets as markets attempt to recover, but we don't have patterns as the carry what trade continues to unwind and be one of those news stories in the backdrop. It's going to be pattern watch, Matt. And you pointed something out very interesting to me this morning. You're like, everything's near the 200 on the major indices. Matt, break down the technicals for us.
Yeah, I think that's what's interesting about the market right now. It's not exactly a common occurrence for all of the indexes to simultaneously be around the 200-day moving average, but that's kind of what we're looking at here. You got the ES right up there at the top left-hand corner, right there sniffing that 200-day moving average. Dow Jones doing the exact same thing that the ES, and obviously the NASDAQ really battling that 200-day moving average, and the Russell 2000 decided to take 3 days to do what the NASDAQ took about a month to do, but it found that 200-day moving average as well. And so all of the indexes are simultaneously doing the same thing. And from a pattern perspective, quite frankly, we all need them to do the same thing as well. Today's price action is a little bit of an overextended reprieve bounce. Nothing to see here so far. It's just a little bit of a slowing momentum that was expected, given the very big downward pressure in price we've seen over the last 3 trading sessions. Oftentimes, you're going to see that get digested a little bit in secondary pattern identification. And that's what we're going through right now. We're going to see patterns develop here that could be on the bull side, could be on the bear side. But when you're going through pattern identification, you got to kind of let that play through. Is it a reversal pattern? Is it a continuation pattern? We don't know that with one slowing momentum candle. But as we start to get more data and more data, we'll start to identify whether or not this is a V-shaped recovery, whether or not it's a double bottom, a head and shoulders formation, or something a little bit more on the continuation side. And so it's a good data point from a slowing momentum perspective. But the last thing I'll say on the index side is slowing momentum is not an indication of increasing bullish momentum. It is simply an indication of decreasing bearish momentum. You want to see the bulls pick back up, and you do that through pattern identification at the bottom point on the chart. So could this be a really good buying opportunity? Yes, I do believe it could be a really good buying opportunity. And I do believe we might be overshooting a little bit of the concern in the economy and the concern on the carry trade a little bit. But as that concern plays out, we're obviously going to see patterns develop to give us a better identification of if it's something beginning or something concluding. We do that through pattern identification.
Yeah, we're among the best in the biz at identifying reversal patterns. My brother here talking wrote The Art of the Reversal. I promise you we won't miss that. Check in every
Later on
day.
tonight, Chucky, during the coaches show, I'm going to be talking about the art of the reversal, because I do think, even though we're not there yet, I think it's extremely important to understand exactly what we need to be looking for.
Yeah, nothing really on the economic front today, as we had no major data. It's a very light week. Next week's going to be much busier with the CPI, with the PPI, with retail sales. Not much going on this week. Unemployment claims on Thursday because labor, but it's really next week when this recession, is it coming or not, where that conversation will kick back in. And will be interesting to see what patterns occur if that data comes in good, just kind of thinking ahead. Matt, but that does give us a chance to focus in because it's still earnings season right now. I know in the midst of all the chaos, if you might have forgotten that it's still earnings season. What do you got for us, Matt?
Yeah, we got a few stocks reporting earnings here today. And again, it is still earnings season. We still got a tremendous amount of companies reporting earnings here this week. We're just not going to get those big names with a lot of tremendous market movers. You're going to get companies like Palantir this week, Uber this week, Caterpillar, important for their space, not necessarily market movers here. And Palantir, first and foremost, came out with a pretty decent report. They beat on the EPS, 9 cents against 8 cents. Revenue also topped the expectation. Revenue was a really big win for Palantir as they came in above 652 million expectation. $678 on the quarter. That equated to a 27% year-over-year increase in revenue, as well as guidance, Mark. They decided to upgrade their revenue guidance just slightly for 2024. Given the fact that they did beat on the quarter, they did increase that just slightly from 2.68 billion up to about 2.74 by 2.75. So really good report coming out of Palantir. We got a hat trick type scenario with a slight beat on EPS, a bigger beat on the revenue side, and guidance slightly upgrading as well. Now, technically on Palantir, you're going to want to see a secondary pattern develop, as we often do, but a pretty decent report coming out of Palantir. Moving on, let's talk about Uber a little bit. Uber comes out with a decent report as well. EPS came out above the expectation, 47 cents against 31. That equates to a really good 51% beat. Revenue did come in above the expectation, and it did increase year over year by 16%. So a pretty good report coming out of Uber, but a little bit of a technical challenge as you are in front of a lot of important moving averages. Going to need something pretty significant on Uber on the bull side, because that was a pretty decent report, but a pretty nasty technical condition, quite frankly. Now let's move on. Let's talk a little bit about some industrial companies that did report earnings here today. Caterpillar, industrial giant out there, EPS beat by 8%. Revenue came in slightly above the expectation with a negative 3% year over year. So we got a little bit of a mixed report here on Caterpillar, and we got some mixed price action as well, as Caterpillar is fighting that 200-day moving average, very similar to what the market is. Outside the industrials, or staying in the industrials, we have CSX. CSX came out with a 2% beat. Revenue came in flat year over year. Pretty boring report, but this candle here today just reminds me of a pretty decent report that would have been a little bit of a doji if it wasn't for yesterday's bloodbath. So a little bit of a better bounce than what we typically would have seen on CSX, but it did wipe out a little bit of the candle from yesterday with that pretty aggressive sell-off that we saw across the board in the market on Monday. Now let's move over and let's talk a little bit about MPC, the energy giant out there. MPC's got a little bit of stabilization on the shorter term time frames. Longer term, you're finding a little bit of neutrality as well. When you look at that weekly chart, you got some overhead you got a little bit concerned about at 180. The reason I bring up that overhead is because MPC had one of their better beats in the energy space. They came out with 412. Expectation was 304. That's a 35% beat. Revenue also topped the expectation. They had revenue growth of 4% year over year. Now, that might not seem like a lot, but when you're dealing with about a negative 1% revenue growth year over year in energy, MPC stands out a little bit. But once again, got a little bit of a difficult, technical, challenging environment as well to navigate there. And then in the earnings front, you also had KVU that came out and had a pretty decent report. They had a 14% beat on EPS. They did miss on the revenue side from a year over year growth perspective, came about 1% negative on the year over year, but on the guidance, they did reaffirm. So they got a good beat on EPS. They reaffirmed forward-looking guidance, and coming from the low point, looking at that reversal type situation, KVU here came out and just blasted up above all those longer duration moving averages. Anything on the high base, anything on the secondary pattern watch, that works coming from a low stock like KVU. That's it. That's all we had, Mark, for stock for earnings in the news here today. Two other quick stock stories in the news. There is some chatter out there, speculation that NVIDIA is delaying their next generation AI chip. We'll have to see that get confirmed. NVIDIA is getting a little bit of an oversold bounce. And Google also lost an antitrust federal lawsuit yesterday, and they're dealing with that a little bit in price action. But in terms of the specific price action, looking a little bit similar to a lot of stocks out there with the indexes fighting the 200-day moving average. Well, we got Google fighting that same thing as well.
Yeah, no, I always like it when you bring up like a KVU, which isn't a mainstream company. Is usually because you see something on the technical side that's very appealing to you. We'll continue to talk about that one on the Traders Lounge in the coming days. Let's go finish up fire through commodities, Matt. Commodities, little bit of volatility in certain areas, along with many major markets. We've seen that in crypto. Fire through the commodity charts. Tell me what you're seeing.
Yeah, a little bit of a double top action in the short term on the gold chart. Not looking very good from a pure technical perspective. Double top against the short term price action. Weekly chart still looks really, really, really good. So you got some mixed time frames we got to work out on the gold chart. That's not too crazy given the fact what the dollar is doing, given the unwinding of the carry trade. Overall, I believe gold will resolve higher as we do get resolved out of that unwinding of the carry trade. Moving on, silver's got a little bit of work to do, quite frankly. You got a technical challenging short-term trend. You're still a little bit of a distance away from that 200-day moving average. You're going to want to see that one certainly play out. Copper's a little bit in front of the silver analysis with the 200-day moving average. It's not a good look right now. We're dealing with a lot of volatility in the commodity space. But in general, if this settles in and settles down and gives us a little bit of a reversal type situation, copper could look pretty decent in a little bit if you just hold the $4 level, work off that volatility a little bit, start working up a little bit, and start getting into a little bit of confirmation. That confirmation for me would start at $4.20. But that 20 period moving average, look at that converging underneath that 420. That is going to be a good look as well. Outside of that, Bitcoin, looking at the crypto market, obviously dealing with the tremendous amount of volatility itself. And we're going to have to see that simmer down, settle in before we see what that secondary pattern starts to look like.
Yeah, listen, Matt, thanks for it all. Listen, come join us on the Traders Lounge if you're a pro member. And if you're not a pro member, it's a great community. Matt, talk about that community and send us out.
Yeah, if you're if you're not part of Tackle Trading yet, certainly can go over to tackletrading.com and sign up for a nice little free trial of the Tackle Trading Pro membership, and you can enjoy everything else every pro member enjoys, such as the coaches show later on tonight, where we're going to be learning reversal analysis while we're identifying awesome value opportunities. That's in the coaches show later on tonight. So come over to Tackle Trading and sign up for a free trial so you can be a part of all of it.